Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us solve now one question of dissolution of partnership firm where partner has taken asset at the time of dissolution. When business is closed down, firm is required to dispose of all its assets. Some of the assets will be sold to outsiders. There is possibility that some of the assets could not be sold. In that situation, such assets are taken over by the partners, which will is considered as their drawings and debited to their capital account. Sometimes partner, he may show his wish to take a particular asset and other partners may give consent to that. In that case, how to give accounting treatment, let us see now. Let us go through the balance sheet. Asset side, cash at bank 18,000. Bank account will be recorded, and to the debit of bank account this amount will be recorded. Cash at bank, bank account debit. Stock, this will be transferred to realization account. Realization account debit. Furniture, realization account debit. Investments, realization account debit. Machinery, realization account debit. Buildings, realization account debit. Debtors, gross amount will be transferred to realization account debit, that is 24,000. RDD, it will be transferred to realization account credit side, 3,000. Liability side, capital of Paresh Mahesh, it will be transferred to capital account credit side. A reserve fund will be divided in profit sharing ratio. It will be transferred to partner's capital account on credit side. Loan from Paresh, Paresh is a partner, so separate account has to be opened for partner's loan account. This amount will be credited to loan account, 6,000. Bills payable, it will be transferred to realization account credit. Creditors, it will be transferred to realization account credit. The firm was dissolved as on 31st March 2010 and the assets realized as under. Paresh took over investment at rupees 27,600. One of the asset investment is taken over by partner Paresh. Paresh account will be debited and realization account will be credited. Second adjustment, Mahesh took over furniture at rupees 84,000. Mahesh debit, realization account credit. In this case, we should observe that assets are taken, investment 27,600, whereas book value of the asset is 30,000. Mahesh took over furniture for 84,000, book value of the furniture is 90,000. That means assets are taken at a lower value than book value or balance sheet value. Now this is a loss for the firm, but this loss should not be recorded separately in books of accounts at the time of dissolution. There is possibility of profit if asset is taken over by the partner. That means he is taking an asset at a value higher than book value. Even in that case, profit should not be separately recorded. It gets adjusted whether profit or loss in realization account. The assets were realized as follows. That means the assets were sold, amount is received. Stock 73,501, debtors 22,502, machinery 84,003, building 42,004. These four assets are sold and amount is received. So bank account will be debit and realization account will be credit. The creditors were paid off at a discount of 900. Here creditors are given 30,000 book value. 30,000 minus discount rebate 900. So actual amount paid to creditors will be 29,100. This will have one effect: bank account amount goes bank credit and realization account debit for the amount 29,100. We should not record discount separately 900. It gets adjusted with a realization account. Other liabilities were paid in full. Here other liabilities means bills payable paid in full. So bills payable paid in full will have two effects: bank account credit and realization account debit. Loan from Paresh, it is paid in full 6,000. We have separately opened loan account, so loan account will be debited and bank account will be credited for payment of loan. Dissolution expenses were rupees 4,200. This will have two effects. This is the amount paid relating to dissolution. Bank account will be credit, realization account debit. Paresh and Mahesh were sharing profits and losses in the ratio of 3:2, that is 3/5 and 2/5. Pass journal entries to close the books of the firm and prepare realization account, capital account of all partners, and bank account. In the books of partnership, Messrs. Paresh and Mahesh, we have opened a realization account, cash bank account, partners capital account, and Paresh loan account. The first step of solving problem is called as transfer step. Under this step, we transfer each and every item of balance sheet to various accounts. Let us start with this with assets. Cash at bank will be transferred to cash bank account debit side to balance brought down 18,000. Cash bank account debit side to balance brought down 18,000. Bank balance is transferred. Next we have stock, furniture, investments, machinery, building, debtors, gross value 24,000. These all will be transferred to the debit of realization account. Realization account debit side to sundry assets. Stock, furniture, investment, machinery, debtors, building. Book value is taken here. Total amount is 3,54,000. RDD 3,000 will be transferred to the credit of realization account. Debtors transfer to the debit side at gross value and RDDs transfer to the credit by RDD 3000. Now other liabilities, bills payable, creditors will be transferred to the credit of realization account. Bills payable 3000, creditors 30,000, total 33,000. By sundry liabilities 33,000. Loan from Paresh 6,000 will be transferred to loan account. Paresh loan account credit side. By balance brought down 6,000. Capital account of Paresh Mahesh will be transferred to their capital accounts on credit side as by balance brought down 1,50,000, 1,50,000. Partners capital account credit side by balance brought down Paresh 1,50,000, Mahesh capital 1,50,000. Reserve fund 30,000. This will be divided among partners in their profit sharing ratio. In partners capital account to the credit side by reserve fund, it is divided in the ratio of 3:2. Paresh 18,000, Mahesh 12,000. We have transferred all items given in balance sheet to various accounts. First step of solving problem is over, that is transfer step. Second step is realization of assets. Paresh took over investment at rupees 27,600. This will be debited to Paresh account and credited to a realization account. Paresh capital account debit to realization account. Investments taken 27,600. Realization account credit side by Paresh capital account. Investments taken 27,600. Mahesh took over furniture at rupees 84,000. This will be credited to realization account and debited to Mahesh capital account. Realization account credit side by Mahesh capital account. Furniture taken 84,000. Mahesh capital account debit side to realization account. Furniture taken 84,000. The assets were realized as follows, means sold. Stock 73,500, 1. Debtors 22,500, 2. Machinery 84,000, 3. Building 42,000, 4. Amount is received. So one effect will be to the debit of cash bank account. Cash bank account debit to realization account. Stock, debtors, machinery, building. Actual realized amount. Total is 2,22,000. This will have second effect in realization account on credit side. Realization account credit side by cash bank, stock, debtors, machinery, building. Total amount 2,22,000. We have completed second stage, that is realization of assets. Third is realization of liabilities, that is discharge of liabilities. Creditors were paid off at a discount of 900. Creditors are 30,000. Actual amount paid is 29,100. This will have one effect, realization account debit side. Realization account debit to cash bank. Creditors paid 29,100. This will have second effect in cash bank account credit side. Cash bank account credit side by realization account. Amount paid to creditors 29,100. Other liabilities were paid in full. Bills payable 3,000. Paid full means full amount 3,000 paid. One effect we can take in cash bank account credit side. Cash bank account credit side by realization account bills payable paid 3,000. This will have another effect in realization account on debit side. Realization account debit side to cash bank bills payable paid 3,000. Paresh loan 6,000 paid. This will have one effect, cash bank account credit side. Cash bank account credit side by Paresh loan account amount paid 6,000. This will have second effect in Paresh loan account on debit side. Paresh loan account debit side to cash bank account 6,000. Loan amount is paid. Here Paresh loan account gets closed. Loan of 6,000 is fully paid. We have completed third stage, that is realization of liabilities. Fourth stage of solving problem is payment of realization expenses. Dissolution expenses, that is realization expenses, were 4,200. This will have one effect, cash bank account credit. Cash bank account credit side by realization account expenses paid 4,200. This will have another effect in realization account on debit side. Realization account debit side to cash bank, dissolution expenses paid 4,200. Here we have completed fourth stage of solving the problem. Now last stage is closing all the accounts. Let us start with realization account. Debit 3,90,300. This is the total which is higher than credit. So same total is recorded both the sides. Here there is a realization loss amounting to rupees 20,700. This loss will be divided among partners in their profit sharing ratio 3:2. Loss 20,700 divided between partners in the ratio of 3:2. Paresh 12,420, Mahesh 8,280. This loss will be transferred to partners capital account on debit side. Loss is transferred to partners capital account on debit side to realization account. Loss transferred 12,420, 8,280. Now we'll be closing partners capital account. We have to compare credit and debit column of Paresh. In case of Paresh, credit total is heavy 1,68,000. This is recorded on both the sides. Now from this 1,68,000, we have to deduct these two values to arrive at balance. Paresh capital account debit to cash bank 1,27,980. Now we'll be closing Mahesh capital account. Mahesh capital account total is 1,62,000. Credit is heavy. Balancing figure is 69,720. These are the amounts payable to partners on closing of firm, that is in full and final settlement. This will have effect in cash bank account. Cash bank account credit side, by capital account of Paresh, Mahesh, amount is transferred, balance transferred, total is 1,97,700. Let us now close cash bank account, total of debit side and total of credit side. It must match, it should tally. Credit total is also same 2,40,000. Both are matching. It shows that we have correctly solved the problem. We have completed ledger. Now we'll be proceeding to do journal as asked in the question. In board exam, they may either ask ledger or journal and not both. Here, just to understand, as it is asked in the question, we are doing journal. Journal can be solved without preparation of ledger. Only for two entries, last two journal entries, we required figures from ledger, that is balancing figure of realization account and balancing figure of partners capital account. So we will complete journal as far as possible without preparing ledger first. First step is transfer step. So we'll be transferring these assets: stock, furniture, investment, machinery, building, debtors at gross value to realization account. First entry, realization account debit to stock, to furniture, to investment, to machinery, to building, to debtors. Here we have recorded book values, total is 3,54,000. This entry can be alternatively passed as realization account debit to sundry assets 3,54,000. RDD will be transferred to realization account amount 3,000. RDD account debit to realization account 3,000 being RDD transferred. Reserve fund will be distributed between partners in their profit sharing ratio 3:2. Amount is 30,000. Reserve fund account debit 30,000 to Paresh capital account 18,000 to Mahesh capital account 12,000 being reserve fund distributed. Bills payable and creditors will be transferred to realization account on credit side. Bills payable account debit 3,000, creditors account debit 30,000 to realization account 33,000 being liabilities transferred. Here we have completed first stage of solving the problem, that is transfer stage. Second stage is realization of assets. Paresh took over investment at rupees 27,600. Paresh capital account debit to realization account 27,600 being investments taken by Paresh. Mahesh took over furniture at rupees 84,000. Mahesh capital account debit to realization account 84,000 being furniture taken by Mahesh. The assets were realized as follows: stock 73,500, debtors 22,500, machinery 84,000, building 42,000. Cash bank account debit 2,22,000 to realization account 2,22,000 being stock, debtors, machinery and building realized. We have completed second stage, that is realization of assets. Third is realization of liabilities. Creditors were paid off at a discount of 900. So creditors are 30,000, actual amount paid is 29,100. Realization account debit 29,100 to cash bank 29,100, being creditors paid at a discount of rupees 900. Other liabilities were paid in full, that is bills payable paid 3,000 and loan from Paresh 6,000. Realization account debit to cash bank 3,000, being bills payable paid 3,000. Paresh loan account debit to cash bank 6,000, being Paresh loan paid. Here we have completed second stage as well as third stage of the problem, that is realization of assets and liabilities. Fourth stage is payment of dissolution expenses. There is payment of dissolution expenses 4,200. Realization account debit to cash bank 4,200, being dissolution expenses paid. With this we have also completed fourth stage of solving the problem. Now next is closing realization account to find out profit or loss. Now here we require opening of ledger. Such ledger should be open as a working note where you should not write anything in particular column. Just put values in amount column, match them, find out whether there is a profit or loss. We already have prepared ledger where we have loss shown by realization account 20,700. This has been divided between partners in their profit sharing ratio 3:2. Paresh 12,420, Mahesh 8,280. Paresh capital account debit 12,420, Mahesh capital account debit 8,280, to realization account 20,700, being a realization loss distributed. This amount is transferred to partners capital account and then partners capital accounts are closed to find out final payments made to partners. In case of Paresh 1,27,980, in case of Mahesh 69,720 are the balancing figures. This is the amount finally paid to partners. Paresh capital account debit 1,77,980, Mahesh capital account debit 69,720, to cash bank 1,97,700, being amount paid to partners in final settlement. Here we have completed all journal entries. Then we are required to take grand total when only journal is asked in question. Otherwise, there will be cutting of marks, like 2 marks will be deducted for not showing the grand total. Grand total is 10,14,300. Here in this question, we have done both ledger as well as journal. In exam, students you should be careful, see whether they have asked ledger or journal, and accordingly do only ledger or journal and not both. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.